So an exciting payroll ahead, especially with the release of the Federal Reserve's interest rate decision in Wednesday's news. We're looking now to see if we're going to see any more clarity in this recovering jobs market, to see if there's going to be any signs of an upturn or a downturn on these big dollar pairs that we've seen such an ascension on, and with the US index as well really pushing higher. So we'll see what will happen in that sense. So I'm just going to take you through the PowerPoint presentation at the moment. We're going to jump on board with my colleague Daniel, who's going to take us through a few things in roughly about 15-20 minutes once he is available, and then we're going to see what is in store for the NFP numbers. So just let's get right into it. So just a quick disclaimer before we get into it. So foreign exchange trading and investment derivatives, CFDs, can be high speculatives and may result in losses as well as profits. Foreign exchange and derivatives trading is not suitable for many members of the public, and only risk capital should be applied. This webinar is provided for information purposes only, and no information contained herein constitutes a solicitation for the purpose of purchase or any sale of commodities, security, or investment, nor should it serve as a basis for any investment decision. Orbix Limited does not guarantee the accuracy or completeness of any information or analysis supplied. So without further ado, let's just take a look at what happened in last month's reading and what the expectations are this time around. So as you can see here, we've got the analysts are expecting a decrease. At the moment, the last job numbers that we had was from 431,000, which was the last time we had it, and now 391,000 is the expectancy in the last update at the moment. We've also got unemployment rate. It's likely to drop slightly to 3.5%. It's been hovering roughly about 3.6, 3.7% for the last few months. However, now it's going to go to about roughly 3.5%, and that should be the lowest since February 2020. Sorry about that. That's 22. So we're just looking to see what's going to happen with that as well. And April's NFP release decreased from 490,000 to 431,000, which was roughly just about 59,000 jobs difference. But if we look at the previous jobs numbers here, I've got a nice chart just to show the ascension and depreciation on both sides. Now we had this big jump of 750,000 new jobs added a couple of readings ago, but now we're seeing a move to the downside once again, 431,000, and if this number is to be decided, 391,000 as well. Now I just want to quickly show you, I've got my MT4 platform open with just a basket of the top trades at the moment. So we'll go through these in a bit, but I just want to show you, just put this on a daily chart for euro dollar, the vast descension since we've had this recent peak, almost at 115. And as you can see here, over nearly 100 pip move, sorry, 1,000 pip move in that direction to the downside. But since we had the Federal Reserve rate decision, we've had a bit of an uptick. And you could say the same roughly for when the Bank of England, this is the pound now, this is cable, the Bank of England released their interest rate decision as well. So it looks like a bit of an upturn for bulls at the moment. And also just to take into account at the US index, now just bring this out into the big chart. This is on the daily chart because I want to just emphasize the big grand upturn in prices, something we haven't seen, as you can see, for many, many years. Just put this on the burner here. It's going back roughly, well, we can check ourselves actually, just how far back we can go. And roughly back to 2018. So 2008, the chart actually doesn't go any further back, but it's actually 2002 that we last saw these big shifts. So 20-year high for the dollar index. Will there be a bit of a pullback? Well, we've seen it here, and now expecting another move to the upside as well. So we'll see how that comes into fruition shortly. So this is what I'll be looking at now. Then going forward, we've had a bit of an upturn, downturn, now another upturn, and then we'll see if we're going to start moving lower in the near term for the next couple of months. With this recovering economy that's supposed to be on the cards, we'll see if that has anything to do with the next data coming out. So lots of things to talk about in this NFP. We're also looking at weekly jobless claims as well. They're still hovering around 200,000 a week. We had this dip down into the the 180, 170,000 category, and it was 181,000 last time around. And that's popped up to 200,000. But the good thing is, this actually warrants pretty much a 52-year low in jobless claims every week. So that's quite an outstanding number in that respect. And inflation as well, big topic that we're going to be talking about for probably for a while. It's moved up to 8.5%. This is still the highest since 1982, even from when it got to 6%, 7%, 8%. From 1982, we are looking now that it's going to keep on pushing higher. But with the vast ascension that we've seen from a lot of the interest rates around the world, we've got not only in Europe and America, but we've also got in Asia as well, with India punching base rates up higher as well. So we'll see if that has any effect on the global inflation policy. But at the moment, inflation rates really pushing higher, and you've got to say that energy prices are the main worry around the world for a lot of this thing as well. So I just wanted to point out as well, I am taking any questions live on the chat. I've got one question. What do I trade? Well, at the moment, I'm trading the main currencies. I've been trading the dollar index for a while since we saw this vast ascension, since it broke 90. I'll show you when it was. Since it broke this particular resistance level here, roughly about just over the 99 mark. And then I opened a position up into 100. I did close just over 100. I didn't see any more upside, because then we had this downturn here. Just got to ask a question on gold as well. Let's get straight into gold as well. So at the moment, let's put it on the daily charts. So it's a bit easier to comprehend and see. Just got a couple of levels that I was looking at beforehand, the 1929 zone. So at the moment, the conflict in the Ukraine with Russia is really moving gold and oil quite significantly. And you probably are well aware that it is actually, I'll just stop sharing my screen so it's a bit easier to see me. Hi, everyone. So as I said, any questions that you want to put forward to me, let me know. But the gold and oil situation is moving in tandem together. We've got oil supplies really being cut, and we're also seeing what's happening with gold as well. That's moving in the same direction. I've been asked euro dollar, dollar CAD, and pound dollar. Well, the euro dollar, we just touched upon it. We're looking now at heavy resistance. The last time we saw these levels was at the end of 2016, and we saw the 103 level being hit, and then we saw a vast ascension to the upside, which was here. And as you can see here, from that bounce, I mean, look at that, over 2,000 pips higher, and that was in the space of, let's just see when that was. So it was end of there. So that's really just over a year, we saw 2,000 pip move. So in that respect, if we do get a bit of support at this 104, the high 104 handle, are we going to see another sharp move, roughly about another 1,000, 2,000 pips to the upside? We'll have to wait and see, obviously, but it is looking quite precarious now, because we are now seeing more and more of a divergence between what's happening with the euro, the pound, due to this conflict as well. Obviously, we've got the local elections in England, in the UK, that happened last night. The current Conservative Party have lost a lot of seats in their party in the House of Commons, so that could have a big effect on cable as well. As you can see here, very big swings in the market. It's going down to a 4-hour chart. Actually, let's go down to a 1-hour chart, so it's a bit easy to see. So at the moment, as you can see here, we've got, this was just yesterday afternoon when some of the polling came out, and now we've had a drop of over 250 pips. So it's not been a very good day for the pound at the moment. So let's just go straight back into the presentation quickly, because I want to get everything out of the way before we really start looking at the nitty-gritty parts of the NFP and what the possibilities are as well. So retail sales we're looking at as well. They fell down to 0.7% month on month. And this was a very you could look at it two ways. You could look at the fact that it is down, however, it's not in negative territory. When we fell into negative territory with retail sales, it was a very bad thing for the American economy because it was kind of sliding back into a possible recession. However, we had this big jump in retail sales at 5.1%. Then it kind of fell off the map slightly, but we are still in positive territory, which is what we're looking at the moment. Just been asked another question with gold. We just had a quick look at gold. For all those that are joining us at the moment, we're just seeing at the moment gold roughly being pressured below this 1900 handle. I'm just going to point out the 1900 handle here because it's quite significant. Every time we are hovering around a big psychological area for gold, it seems to have a very heavy resistance or support. At the moment, I'll just zoom in just so you can see it a bit better. We've had this couple of big false spikes to try and get above the 1900 handle. This is on a daily chart, don't forget. And as you can see here, big resistance here a few days ago, and now that was weighed down quite significantly. We've had an attempt to get back up above the 1900 handle, but it's been weighed down once again. So for me, if we can get above the 1900 handle today, we could see easily another move, probably another $50 move possibly to the upside. But as I said, oil and gold are moving in tandem with the big conflict that's happening in the Ukraine and Russia at the moment. So it's a little bit precarious, a little bit unpredictable at the moment. Just going back into a couple of other things. So we've got ADP employment change, which is the private businesses in America. They missed expectations at 247,000. It was supposed to be 395,000 new jobs added in the private industry. However, it did not come into fruition. And now we've been hit with 247,000. And this is the lowest since April. As you can see here, we are moving back a few months of 2020, so lowest of it in 2 years, and as I said, well below forecast of 395,000. So we are now seeing what is really happening with the American economy. It's not looking as prosperous as we thought it could be. And if we just go into just a few trading tips that I want to go through with you, like I always do, just so that we're covering all our bases. So number one is avoid trading during the NFP if you're not comfortable with high volatility, and the whipsaw effect could lead to losses that exceed profits. Now, what is the whipsaw effect? You could say on gold is, if you look at this candle, it possibly moved quite a lot in this daily candlestick, and we've had a bottom of this wick and a top of this wick. And if we look carefully, that's roughly about just nearly $30. So it's a $30 move on this false spike here. If this was a minute by minute chart, I'll put it on the minute chart now, we could see quite a big move in the market, and a lot of positions might not get taken up. So if you've got a pending order in, and let's say you're trading this candlestick here, it's quite a large one. The price might open on at this point, and the next available price could be this point down here. And if you've got a stop loss or take profit at this midpoint, if there's no price in the market at that particular time, then the market will close or open your position at the next best available price, which will be down here. So that's what the whipsaw effect is. You're opening a price at one level. It's basically so jumped in price on the candlestick up to here, and that's where your position will be open or closed, and it could positively or negatively affect your trade. So just have that in mind as well. And we'll see that when the NFP goes live, because we are not so far away. So just remember, we're trading on one level, the price could open on this level, and in turn your stop loss or take profit will get cancelled, and the next available price, I hope you can see me still, the next available price will be taken in the market. So that's something to avoid as well. Number two, apply protective stop loss and take profit risk management measures in order to bypass emotional hurdles. So if a stop loss or take profit is in place and it does get taken, it is a lot easier to avoid these emotional hurdles in the market that we've all been there and done. We've all had these emotional things going through our head when we are trading, and this can be very, very, very bad for our psychology in that respect as well. So we want to also close out any positions, if any, ahead of the release to move away from high volatile risks. So that just touches on the first point where if you don't want to avoid during not only the NFP, but high impact fundamental news events, we had the Bank of England interest rate decision yesterday. Wednesday, we had the Federal Reserve interest rate decision. So, and now we've got the NFP coming up as well. So these particular high impact fundamental news events, if they're avoided, if you haven't got any positions open, then you cannot be at any risk of your margin or your risk capital as well. Hedge your positions, if any, ahead of the release. Now, hedging is can be quite a helpful tool. So if we just take a look at the terminal here, I've got roughly just over 200,600 in my demonstration account with Orbex. So if I just want to open, let's say pound dollar, let's just go low. 0.1, so we're buying that and let's sell that. So this can protect some of my risk capital. However, whipsaw effects can mean that if I don't have enough equity in my account, I could still be stopped out even if I am fully hedged, because if prices do spring up to all of a sudden up here, this will my sell position will go into such a negative, it could bring my free margin right down. So this is what it means in that respect as well. So we'll see if that has any bearing at all. So number 5, also, if you are eager to trade despite the warnings, do let the markets calm down before entering a trade. That way you overcome the heated environment, and you could also have a clearer picture as to where the markets could be heading towards as market noise is reduced. So because Daniel will be along shortly, I'm just going to quickly set up my headphones because I'll be able to hear him, obviously. Analyze the data post-release. Any directional trade is at risk of reversal despite the NFP being over. So this is very important as well. And just like that, I'm going to admit Daniel. Hi, Daniel. Can you hear me?
How you doing? Is my audio finally working this time?
Yes, the audio is finally working. I'll just stop sharing the screen and just bring you into the big picture. So thank you very much for joining me. And how are you doing today?
Good. Well, a bit of a cold, actually. A bit unexpected, but still powering through it.
Exactly.
Last day of the week.
Yeah, true. And with the summer months coming, hopefully that you won't be getting many colds for the rest of the season.
It just happens today. It's kind of rainy and dark. I put on a darker shirt this time to represent the weather outside.
Okay, great. So I've just been telling some of the viewers, I'm going to share my MT4 platform shortly. I just want to go through a couple of the big topics that have hit the market. So we've had quite a lot of big news this week. We've had the Fed interest rate decision, Bank of England raised interest rate decision, and also we've got the NFP numbers coming up. So with that being said, we're looking for quite a few pips movement if you put this on a weekly chart for a lot of the of the currencies. We're looking for quite a lot of big pip movements, aren't we?
Yeah, it's been quite a busy a week, especially yesterday. Everyone's kind of running around because the U.S. stock indices took a big hit. The Dow Jones Industrials down was over 1,000 points, and everyone's kind of. This seems to be kind of like a lot of commentary about why is this happening is because the Fed raised rates but they didn't start the roll off wasn't as much as expected, but it's kind of like seems to be getting missed in the shuffle is that the production numbers from the United States production economy, production numbers for the entire economy are not they came in significantly below expectations. And that's something to be kind of worried about. So I wasn't particularly surprised that the stock market took a bit of a dump yesterday. And well, I guess we'll see what happens after the unemployment data comes out now.
Exactly. Yeah, I'm just looking now. It's dropped from just over 34,000 to just under 32,000 trading at the moment for the Dow Jones. So yeah, quite a big move in that respect. But the dollar index is still. It's taken just a slight back seat, but it's still on a bit of a trajectory at the moment.
Oh yeah, I guess maybe they're waiting for the data because when you have the Fed and NFP on both in the same week, people are like, well, I'll just wait a little bit, get all the data, and then probably jump into the market. So that's why we could see a bit of a stronger move. But I also think this NFP isn't going to be as important because, well, I mean, NFP is always important. I don't mean to say put it that way specifically, but it's like it might take a bit of a back seat because inflation is really the big problem right now. And pretty much everyone already expects the Fed to raise rates again by at least 50 basis points at the next meeting. So unless there's some really big move on the unemployment data, I don't expect it to really change the outlook all that much.
Yeah, I was going to just touch upon that as well, because the inflation data seems to be priced in already. However, we are looking for another 50 basis points hike, and then I think 4% by the end of the year, perhaps.
I think that comes out to be a total of 7 or 8. I think the Fed finally came around to agreeing with the market on that point.
Yeah. And it seems like the Bank of England will probably follow suit then. I mean, they're expected to do another rate hike, possibly by the end of the year as well, going again in tandem 50 basis points at a time. So it's not really, a lot of central banks are acting really aggressively in this to curb inflation.
Yeah, at the last meeting of the BOE, I had 3 dissenters, and they were all for raising it by 50 basis points. And then, of course, you had Bailey going the other way, saying that there might be a recession coming in. He didn't see that there would likely be as much of a chance. So I think the BOE is also going to give us quite a bit of a move move in the markets in response, because there isn't so much certainty as to what the BOE is going to do at the next meeting, because with that difference of opinion there.
Yeah, exactly. And, we have to see as well what is in store for not only the European and American central banks, but obviously the global central banks as well. We've got a few other countries that were in trouble, like New Zealand, Australia. We spoke about it in the recent quarter report that we did together. So it's not I guess it's just the way of the world at the moment. I mean, everyone's just thinking, let's raise the hikes to curb this inflation.
Everyone except the Japanese.
Everyone except the Japanese, they're sticking to their guns, let's say.
Yeah, exactly. We have to maintain that tradition there. But I guess I'm kind of surprised that their inflation hasn't been going up all that much, but I expect it might be just a bit of a delayed reaction, and eventually they'll also have higher inflation in the future. But then of course there's always the possibility of a recession later in the year because of the curve inversion. So even everyone's trying to talk about push that aside for the moment, because we want a little bit more optimism in the market so they keep going.
Exactly. So just I'll quickly share a couple of little bit of data for you just before the NFP numbers just arrived. So last month we had 431,000 jobs added. This month slightly down. I mean, the recent updated jobs was 391,000, but it's not really something to panic about. The difference is roughly about 40,000 jobs. Would you say it's going to really be a bit of a non-performing payroll, perhaps, in that respect?
Probably. Well, the other thing is the amount that's expected now is kind of like at the top range of what you might have expected prior to the pandemic. So we might be getting closer into the more normalized range. I mean, to say that the jobs market is back to normal is a bit disingenuous, I guess, because on the other hand, yes, the number of job creation might be getting closer to the pre-pandemic level, but there's also been a significant shift in the jobs market because there's less people are looking for work. There's I think it's 11.5 million jobs open at the moment, but there's only 6.3 million people actually looking for a job. So we would expect the wages to be going up significantly because in order to get those people to find workers, and the rate of increase in the wages is not matching the rate of increase in inflation, and so that's causing a little bit of a disconnect there. And also that might be part of the reason why we had that drop in productivity that we heard yesterday. If people aren't going to work for whatever reason it is, but if they're not going to work, then they aren't producing, and if they aren't producing, then the economy isn't growing, and that could be a problem going forward.
Yeah, that's true. I mean, we've also got the Canada's unemployment data at the same time as the NFP this time around. So there could be quite a big hit on the loonie as well, because look at the stats now, and it's looking like it's going to be in line pretty much like this, or maybe just 1/10 percentage point difference. So possibly there could, I'm just always eager to see if there's big Canadian news at the same time as the dollar news. Then
it always kind of gets it always gets a little bit overshadowed, and then you have the dollar moving, and then the Canadian also moves a little bit.
Yeah,
Yeah,
exactly.
it's always good to pay attention to it, because that's where you can see you can have quite a bit of a move, particularly if you're.
Exactly. So just before we get into the last few moments before the NFP, it's just about 3 minutes. Also, just looking at the US weekly jobless claims as well, it's still roughly about the 200,000 mark on a weekly basis, but it's really fallen quite significantly since the last couple of years. I mean, obviously we had the pandemic and everything. That was a big hit on the weekly expectancy, but now we are not trading. So we are looking at the data very low, and it actually hit a 20-year low or something like that. However, we are looking at this annual inflation surging up to 8.5% as well. So do you see the inflation being moderately stable since the Fed has raised the rates in the next few months?
Well, that's the plan. The
Yeah.
theory is that the Fed will cut inflation, but there's a good chance that they might not be able to do that, because the one of the main there's two main drivers of inflation is the increasing price of transportation because of increased fuel costs, and the Fed can't control that. And also you have the supply chain issues, and the Fed can't control that either. So
Exactly.
they could be raising rates, and the inflation could keep going up. And of course, what the Fed is really worried about is the connection that you mentioned with the employment, because you have the wage price spiral that can get out of hand, and that could really push inflation significantly higher. And I mean, if we do a little bit of memory, it was before I was born, actually, when the United States had this huge spike in inflation. But in order to control it, that was under Paul Volcker. He had to raise interest rates up to 20%, which would,
Yes.
massively impact the economy. And that's something that I don't know. Probably shouldn't. Something we shouldn't be hoping for.
Probably not.
Yeah.
So I just had a live question about our projections for gold. I was speaking before you came on air, and I was thinking, the 1900 handle is always something that I look for like a psychological level, and that was recent. The last time we had it was since this recent drop of roughly about roughly about $30-$40. So with these big swings in gold, like it's not going $10 anymore. It's kind of like going $30, $40, $50 swings.
Right.
So can we possibly see, now that we've found a bit of support at roughly about this area, the 1860, can we expect maybe another $40, $50 swing to the upside? Is it possible?
Well, actually, I wrote an article about that today. I think I don't know if it's been published yet, but
Okay.
Slight plug.
I'll be on our blog. Yeah.
Yeah. I mean, it's kind of a difference. It probably about along the lines of risk, essentially, because what really pushed the gold up previously was the issue that happened in Ukraine, but the fundamentals are kind of pushing gold to the downside at the moment. So if we have a major risk event, which is probably why you have these bigger swings, is because they're moving on the basis of how worried people are. Yeah. And if we've been tracking the VIX lately, we've seen that the market has been quite worried about what could happen. That's why the VIX has been going up. We've had increased volatility, and so I would potentially expect gold also to have that same level of volatility. Now, whether that volatility is towards the upside or towards the downside, that depends on risk factors, and risk factors are the hardest thing to predict. Yeah,
of course. So I'll just put it onto the tile windows, because we're just getting into the data coming out now. So just waiting for the non-farm payrolls. So 428,000 jobs added. So
pretty much,
391,000 expected, but in line with, let's say, a bit of a consensus there. So not too much of a surprise. And as you can see, the market isn't really going too crazy at the moment on the first initial movement.
It's in the range.
It's in the range. Unemployment rate came at 3.6 as expected. So no big moves there. And average hourly earnings, again, 0.3%, slightly down from last time around, but not too much in the way of something crazy going on in the market, let's say. So we could say a bit of a non-performer, but we're getting some more questions about gold at the moment. But
everyone's got gold on their mind.
Yeah, everyone's got gold on their mind. But I'll just go into the minute chart for gold. So we've had a bit of a move to the upside there, roughly about $4 $4 or $5. But now it seems to be making its mind up to see if it's going to come back down as well. So,
oh yeah, that specifically in gold having a little bit of a bump up there, maybe it'll fade relatively quickly because
yeah, it looks like it.
yeah, because I don't see it as necessarily related to monetary policy, because everything that's going along here just sort of confirmed that the Fed will probably do its 50 basis points next time.
Mm-hmm. Yeah, true. I mean, gold is. I was telling the viewers that gold and oil have really been moving in tandem with the incidents in the conflict between Ukraine and Russia in the last few trading sessions, the last couple of months, but not really fundamentally driven at the moment, gold or oil.
Yeah, pretty much. So it would be a quite good assessment, actually, if I may compliment the colleague.
Thank you very much. So yeah, a bit of a non-performer. I mean, it's always a bit of a shame when we are gearing up for a bit, some big fundamental news event, but there seems to be not too much happening. Even on dollar yen, we are seeing a complete reversal there, pretty much. Same as gold, really. We've gone down, then up. Gold, obviously the other way. And let's just take a look at the Dow, because Dow, we did mention it a little bit. So let's just take a minute by minute chart there. Again, yeah, possibly a full reversal, fading out now. So not too much in the way of something that we could really trade on, is there? It's a little bit disappointing.
Yeah, I guess that's mostly like an algo thing. There might have been one small piece of data that pushed the algos to do something, and then now the traders are coming in and saying, naughty little programs there to get back to normal.
Exactly. Yeah. So just with the news coming off, then what can we expect, let's say, for the next to the next NFP for euro dollar? Because we've got a few questions for euro dollar in the last few months. Where's it go for the middle of in the middle of the year? I've just brought on the daily chart, and I was just pointing out that we didn't see these levels since the end of 2016. I was putting on the weekly chart here, and that's when we saw these fresh lows of touching the 104 handle, but then we had a 2,000 pip move to the upside after that until it fell down. So I was thinking, what are the chances now? We've had a little bit of support, roughly about the 105 handle, just below it. Can we expect now possibly a punch to the upside, a really big move to the upside now?
Well, it's actually a pretty pertinent question, because this morning there's been quite a lot of speak from ECB members, and they've all been saying that it's time to raise rates. They've been mentioning raising rates before the start of summer. And so if we calculate that start of summer, technically 21st of June, that would be at their next meeting that there might be an interest rate hike. And of course, one of the main drivers there with the euro dollar is the difference in interest rates, because the ECB hasn't been raising rates and the Fed has. So when is the ECB going to do their liftoff? And so if they do that, or it gets pretty much confirmed that they will, then we might see the euro finally moving a little bit higher.
Mm-hmm. Yeah, and also I guess you could maybe say the same for cable. It could have a bit of a lift off in that respect. If it goes to the weekly chart again, we saw these fresh lows when the pandemic started, but since then it's been quite a vast ascension until we saw another dip to the downside. I was telling the viewers that we had the local elections in Great Britain overnight, and it's not
I forgot about that. Sorry.
It's not. No, it's fine. It's just there's too much news to comprehend at the moment anyway. But we saw the Tories, the Conservative Party, taking a big hit in their bid to oust Labour and the Liberal Democrats and all the other parties because of the I forgot what it's called now. Not Spygate, not Watergate.
Partygate, I guess it was.
Was it that the one? Yeah, where the Prime Minister technically forgot that he was at a party during the lockdown. So he's lost a lot of confidence there, and it's showing now on the voting. And if we do get another general election, we could have a new prime minister in Downing Street, most probably. What could that do for cable, do you think?
Oh, well, there was quite a bit of rumor that Johnson would be replaced. What was it, at the beginning of the year, if I remember correctly? And then it didn't really go anywhere. But like, if he's replaced, the most likely replacement that they're talking about is Sunak, and he'd probably continue similar fiscal policy. So probably not all that much of a difference, I would expect. I mean, there would probably be more uncertainty if there's like a general election, but I don't you probably know more about how the political system there works about voting no
Yeah,
confidence and how to call
a
it.
little bit. Yeah. Well, I mean, it's funny because when prime ministers kind of get ousted or they leave, the chancellors sometimes take over, but it doesn't mean that they're qualified or appropriate for the job. So they obviously have a bit of a bad name anyway, especially with the way the lockdowns went in Great Britain as well. I don't think there's much confidence
Right.
in the Chancellor neither, Chancellor Sunak. But we'll see. I mean, it'll be interesting. But I think overnight we've seen a bit of a taste and a flavour of how the British public want to vote for the next general election. So
Yeah.
we'll see what goes on in that respect there as well. So just quickly moving on to gold, just one more final time just before we end the presentation. So at the moment we're trading. For me, the big psychological move is the 1900 handle. We're seeing a lot of pressure since it's dropped below there. If I look on the daily chart, I was just showing the viewers earlier that we did have, a couple of false breaks above the 1900, but it seems at the moment pretty way down below that. So do you think if we don't punch above 1900, could we see possibly these levels before this gradual ascension when the Ukraine conflict started?
Well, yeah, I mean, I think at the beginning of the year, my general idea was that gold would probably be going down slightly, at least for the rest of the year. And then depending on whether we had some kind of event that would push people to want to store their wealth in some place safe. So really, I guess maybe Monday would be a good turning point there because, with the, what's it called, the Victory Day parade that they're going to have in Russia. There's some rumor that Putin might use as a occasion, shall we say, to announce a general mobilization and stepping up the attack on Ukraine. So then there could be an increased amount of risk, and that could, give gold another push. And then of course there's maybe potential sanctions that the EU that could get people to be more interested in gold. But I mean, the fundamentals for now, until we see how the economy evolves during the summer, are kind of pushing it to the downside with potential risks coming along that might just give it a punch upwards. And then depending on what happens, it could go significantly higher, particularly if we have inflation doesn't come under control. There's the expectation now that the Fed has raised rates effectively 3 times, and then by July, they're going to have it raised by effectively 5 times. And if we don't get the inflation getting under control, then people might be thinking, hey, let's go and get back into gold there in case this whole thing with the Fed's doing doesn't actually work out.
Yeah, that is true. Actually, you have to think that if the dollar isn't really, if it's on shaky grounds, then people are going to flock back to the metals and commodities such as gold and oil. Yeah, that's true.
And also, of course, there's the issue what's going to happen with China, because China is one of the larger buyers, at least on the retail version of gold. So with their economy under pressure, there isn't so much excess money that Chinese people have to buy gold, so you have a little bit of drop in demand. So that also another factor to consider. It's not particularly easy. It's quite a lot.
It's not. But is the next Fed meeting? Is it every 6 weeks? So it'll be in June,
so that would be mid-June would be the next meeting.
If my calculation is correct, yes.
I don't have the calendar memorized.
Exactly. So it'll be June. So we'll just have to wait and see. So we're looking possibly at the market being priced in until June, because it is an expectancy that we are looking for further Fed hikes until then. So June, July, and then until the end of the end of the year. Then let's say.
Yeah, I guess probably at the next Fed meeting it would be a good idea to have like a review of the situation, because depending on how things are, then we'll have 2 more months of data, and then we can see how it's really evolving.
Exactly. Okay, then Daniel, I think there's pretty much nothing left to say from this non-performing payroll here. We're just seeing the ripple effects now. I just wanted to, before you came on here, I was just pointing out to the viewers that there could be post-data effects if we do have such a large movement in the market at some point, not just for the NFP, but big fundamental news events such as the Fed interest rate decisions, Bank of England interest rate decisions. So just pointing out that even though the market may quieten down after the news event, there are still ripple effects later in the session that traders should be aware of.
Yeah, especially going into a weekend like we have now.
Yeah, exactly. Okay, Daniel. Well, I think that's all for this time around on this NFP. Thank you once again for joining me as always, and we'll speak again at the next one.
Yeah, awesome. We'll see you then.
Okay, then great. Have a great weekend ahead, and we'll speak again soon.
Likewise.
Okay, bye for now. Bye.
Bye.
Bye. And for all of those that want to have any questions answered live on air, I will be online to answer that as well. So any questions? So we've covered a lot of the questions that have been asked. So we've got what do we trade? We've had a lot of gold questions that have been answered as well, and also the euro dollar, dollar CAD, and pound dollar as well. So if everything is in order, thank you once again for joining me, and we'll speak again next time. As I said, this live blog webinar will go out on our YouTube channel. So if you want to leave any comments, please feel free to do so. And also just want to let you know that I'll be starting our webinars on Monday, free webinars that you can join. This time it will be trading candlestick patterns. And we've also got other webinars as well in store, such as Elliott waves, trading harmonics. Let's just see what other ones we've got here, just so that I'm getting them all, so you're not missing out on anything. And also trading the gaps. Now, what I mean by trading the gaps, let's just look on the euro dollar for the 1 minute chart. We didn't see any gaps in the market because it wasn't really much of a performing chart. But as you can see here, we are looking now at this big candlestick as an example. So this big candlestick moved 25 pips in 1 minute. So the opening price could have been here. The next available price could have been here. So this is technically a gap in the market because we are seeing a price here and a price here. Just because there's a full body candle, it doesn't mean that every single price has been hit on this in this candle. I've been asked about are there any trading signals? We do have our exclusive Elliott waves indicator that is available to download, and it's very, very helpful when seeing the patterns in the market. So let's put this in the one hour chart, for example. I just want to show you how useful it can be. So let's just say we've got an impulse to the downside, impulse of five waves, primary. So we're starting here. So this could be wave 1, 2, and then we've got wave 3. Let's see, wave 3 could be here, wave 4, and then wave 5. And also the good thing about this Elliott waves indicator is it's giving you the retracement levels. So from here to here, from waves 1 to 2, it's saying 29.6. Just see if that Fibonacci is correct. Got the wrong signal out now, 1 second, sorry. So as you can see here, I'm going down. This is a retracement. So 100% to 0% here, 1 to 2 from wave 1. And 2, this is 23.6. It's roughly 29.6. So it's a very good indication, very good tool to see the retracement levels as well. And obviously you can click on that and cancel the waves or cancel the levels just to see the waves. But this will be on my next webinar, in a couple of webinars time, about the basics of Elliott waves, and I'll be going through the Elliott wave indicator that we are offering as well. So that's all to come. So we've got trading the gaps, trading candlestick patterns, Elliott waves, and trading harmonics for the next 4 Mondays in a row. Then this will be at 5 o'clock GMT, so roughly 7 o'clock GMT plus 2, and 8 o'clock in the evening, GMT plus 3. So please join me for that. And as I said, this is all for today's webinar on the NFP. Thank you very much for joining us, and we'll speak again on the next time. Bye for now.